Yeah, it is so nice outside today.
I know. Hi, everybody. This is Z coming to you from NoVa Notes and Awanna Holdings, or better known as Z. And I'm here with my guest today, Miss Lorraine Millington from Melanin Homes. And we're going to get into that in a little bit, but you know the drill. We're going to go through my little disclosures here. So, my disclaimer. So all of the information presented here in this interview is strictly for your information and not really entertainment, but you know, if anything that you need in the way of professional advice, law, financial instruments, anything of that nature, please seek out those professionals for that advice and information. So a little bit about myself, as I always go over. Again, my name is Awanna. People affectionately call me Z because it's a lot easier than saying my name. name. I'm retired from the Navy veteran. Currently working for the DoD as a federal contracting officer, bachelor's in education and a master's in education and public administration. Been in real estate investing informally for a little over 30 years. And that just came by way of being in the military and doing a couple of buy and holds and rentals and things like that here and there. And then I stumbled across mortgage note investing in 2018, and I sold the properties that I had and went dove head first into mortgage note investing. And then I started my company, Awanna Holdings, in 2018, doing mortgage note investing. So here I am, and that's what I do. Here's how you can get in touch with me. I'm all over the place. You can find me on Facebook, LinkedIn, Instagram, Meetup for this particular group, NoVa Notes. YouTube, I have a YouTube with Awanna Holdings where all of these interviews are housed and recorded there, and as well as my website at and email at the@awannaRNH.com. But let's get to the reason why we're here. And let me introduce my guest, Miss Lorraine Millington, the CEO of Melanin Homes. And here is her information up here on the screen where you can get at her on her website. Looks like she's all over the place too, just like me. So you can get her on her website, her email, her phone number is there. She has her social media, LinkedIn, Instagram, Facebook, and all of that. And I'll put this up again at the end as well, so that you guys can have that information so we can get on into Miss Millington. So hi, Lorraine. Thank you so much for
Hello.
and taking the time to let me interview you. As you know, I like to bring forth people who look like us and
Yes.
try to spread that information and education to the
Mhm.
people. I mean, even the ones that don't look like us, but particularly particularly targeting those that look like us, because we don't typically,
Yes.
people in our community don't typically um, go into these areas of alternative investments and things like that.
Mhm.
So I just like to bring other investors to the forefront who look like us, who can talk about their experiences, you know, from the new ones to the very experienced investors I've had on the show. So I really appreciate that and appreciate you guys, you know, just talking about your experience and your business. So tell us a little bit about yourself.
Yes, thank you so much, Z. And I really appreciate you having me on your platform today. So, my name is Lorraine, and my company is Melanin Homes. I guess to give a little bit of educational background behind myself, I do have a bachelor's degree. I also have a master's in finance and data analytics. I've been doing, I think I'm going to kind of mirror your biography because
Hmm.
I also have been informally a real estate investor for a number of years now, mainly because my family has invested in property. But more so, I started my company, Melanin Homes, about 2 years ago in 2019. And then since then, throughout my journey, I stumbled upon notes, and it's kind of been all about notes
Exactly.
since then.
Right.
But But yeah, I also, so I do have a background, a legal background. I do work as a paralegal, and then I also have a tax background. I've been an enrolled agent for a number of years, so I have a pretty diverse financial background,
Yeah,
I would say.
everything. That's cool. That's cool. So how do you think that well, your finance background,
Hmm.
obviously, that is going to tie in very nicely with mortgage note investing. So how have you found that that background has served you so far in doing mortgage notes?
So I find that the finance and especially the data analytics background that I have, because mortgage notes is so paper and numbers heavy, being able to understand what data analytics is, which is essentially turning data and helping it tell a story, that's essentially what we're doing with mortgage notes. I
Hmm.
mean, you have a bunch of information when we're looking at a tape, as we call it, which is essentially a spreadsheet of information associated with the property and the borrower. We're looking at this information and essentially we're looking for it to tell us a story. Tell us whether it's a performing note or a non-performing note. Tell us what our potential cash on cash return is versus our return on investment. So my background has helped me to know how to look at information and interpret it in a way that makes sense, not only to me, but to potential investors that I might be working with. So it just creates a different mind shift.
Right.
Because I've realized as real estate investors, there's so many different facets to investing in real estate. And when you start to talk about investing in notes, that you have to change your mindset because we're taught to invest or to look at the property versus with notes, we're looking at the numbers associated with the property.
Mm.
So I guess it's just a long-winded way of me of saying that our backgrounds help us to shift or to look at things in a different way, and
Right.
that's essentially what I think about notes.
Right. So for a newer note investor or somebody who doesn't know what a note is, how do you describe? So typically, and let me back up a little bit because in my intro, I used to have a slide in there that talks briefly about the difference between the paper being the mortgage
Hmm.
note and the actual property for those investors that might be flippers or something like that. So how do you, when you're talking to a new investor or someone new who doesn't know anything about notes, how do you
Hmm.
explain to them what a mortgage note is?
So what I do it in two ways. So essentially, when we're thinking about notes, we're thinking about an IOU between a borrower and a creditor. So, and most of us have been involved with notes already, right? Whether you went to take out a loan for education, whether you are leasing a car or leasing a phone. I mean, all of these are notes. It is essentially a piece of paper where you're signing it, promising to pay back a certain amount of money over a certain period of time, generally with an interest rate involved. And that's essentially what a note is. And
Mm.
so when I'm speaking to newer investors or newer investors to the note industry, essentially how I describe it is we're purchasing debt at a discount. Because what we need to keep in mind is that when we're purchasing notes, we're not purchasing the property. While there is the opportunity to redeem or regain the property in our names, depending on what the process is. Initially, we need to focus on mortgage note investing is buying debt at a discount, and
Mm.
that's usually how I kind of sum it up, and then we get into more detail after that.
Right, right. I myself, I didn't even think about that until I was talking to another note investor, one of my earlier interviews, Kevin Galang. Hey, Kevin. And he was talking about how he does notes on, just like how you just explained it, how we have notes on cars and,
Hmm.
notes on our phones. And he was talking about how he had created notes, for, I think it was a truck or something like that. And I was like,
Hmm.
huh. I said, I never thought about it like that. And then,
Yeah,
but it's true. And I guess even the bigger thing about it is it's collateral. It's backed by collateral. So that's the biggest
exactly.
thing. Even though you may have like a credit card, for instance, and you sign that agreement with the credit card issuer to repay that debt, they don't have any collateral. If you should decide to, let's say, file bankruptcy or something, and they wipe that debt, and the difference in that with mortgage note investing is that, you know, you do at least have the property as collateral in the event that, you know, the borrower didn't pay that loan back.
Yeah,
of course,
that's a
having gone
great
through
point.
the foreclosure and all that stuff, but that's for another
Right.
another
That's for another episode. That's another episode. Part two.
episode.
Part two.
So, so anywho, so tell us, so with your company, and it's great. Are you just a solo investor now? Do you have partners with the company? And are you just investing in, are you focusing, what is your company's focus? Are you focused on performing notes, non-performing notes, first, seconds, all the above? You know, and how's that going for you?
So essentially, I mean, I am I guess, a solo operation, but you also have team members. And so I initially came out wanting to invest in notes on my own, but because as we continue to share the knowledge and share the opportunity in terms of investing in mortgage notes, I have had opportunities, or I have been presented with the opportunity to partner with other people for particular investments. And so I think that's one of the great things about being able to share what you do to a larger audience, that people become interested and they want to know, like, okay, I've never heard about this before. How do I get involved? So where my company is right now is I'm definitely interested in partnering or working with other investors who are interested in getting involved with mortgage notes. We're pretty fluid in terms of whether we're investing in performing or non-performing. It's really just, as cliche as it might sound, if the numbers make sense or if it's a good deal. So I'm not really married to performing versus non-performing. It really just depends. And I'm focused on first positions. And for those who are for those who are listening who might not know what we're talking about, when you're buying debt or when you are purchasing liens on a property, there's a hierarchy of positions. And you want to make sure that at least you're in the first position and maybe second, depending on what your strategy is, because you want to make sure you're in the best position to recoup your investment, plus potentially make a return on that investment. And so when you're looking to purchase mortgage notes, there are a couple of industries or entities that could be put ahead of you in terms of first position. That's generally the IRS or tax liens, those types of things. But as a mortgage note investor, and at least what I feel works best for my strategy, is being in first position.
Okay. So when are you currently, so I know a lot of investors invest out of their IRAs, and some investors, you know, just invest in their own private capital. And like you said earlier, some investors partner JV with other note investors and things like that. So maybe your partner might be bringing capital to the table. What kind of ways are you deploying your capital? Are you using it in a retirement account or just your own capital?
I'm using my own capital right now, but I do see the opportunity. And, you know, as we become entrepreneurs and business owners, you get introduced to so many different avenues in terms of the vehicles that you can use to invest. So I certainly want to invest with a IRA, but right now I'm doing it with just my LLC and personal funds.
Okay. And so what are some of the longer term goals that you have for your company? Do you see yourself growing into maybe some buy and holds and things like that? So, and I asked that question because, like we said earlier, there's a number of different exit strategies for notes depending upon what you want to do with it. So if you foreclose on a property, maybe you want to take it back, and once you have it, you want to do a seller financing on it, or maybe you want to make it an Airbnb, or maybe maybe you want to flip it, depending on those types of things. see yourself, or maybe you just want to rent it out. Do you see yourself incorporating some of those things into your business model down the line, or do you just strictly want to stay with investing in the notes just for capital, return on your investment, or do you want to expand into those other areas?
So part of the reason why I love notes is because it offers me the opportunity to execute on these different exit strategies. I'm in New York, and I forgot to mention that in my description of myself, but I live in New York. I live in the Bronx. And so, yeah. And so, getting or starting my company or starting my real estate business, you notice a lot of things about the areas where you invest. Some areas are good for wholesaling and flipping and buy and hold, and some areas aren't. And so what I noticed about notes is it was a back door into me potentially investing in property without competing with everyone else, especially here in New York, who's fighting for distressed properties or contacting distressed sellers. So my long-term goals for this company, other than just building a portfolio so I could have generational wealth and continuing to spread that information to other investors, is I want to have the opportunity to help people who maybe don't qualify for a regular mortgage. Because I've noticed with mortgage notes, you can create your own note, or people who, again, who might not have as great of credit, but still want the opportunity to do home ownership. You can, through notes, start to do seller financing or start to create your own pieces of paper, and you can help that person achieve their goals of being a homeowner, and can then just continuing to improve the communities that we live in. So that's a longer term goal. I want to be able to do that on a larger scale. And that starts with just, understanding your market and understanding the business, and then continuing to grow.
Right. You're not, I know you're not just focusing in New York, are you?
Oh, no. See, and but that is, I want to be able to do that in industries where, or in markets where it's a lot harder. I mean, every market has competition, right? And especially now we're in a seller's market, so it's harder to find inventory. But I want to be able to do that option, or to have this option of creating opportunities for those who might not be able to normally have it in the higher price markets, and in some of the markets that not too many people know about. So just the flexibility,
right,
of being able to do that.
Mm-hmm. So before you got into notes, and well, let's touch a little bit about training. So I know that you got some of your training from the Note Assistance Program. So we are all NAP Nation members, as it's affectionately called.
Mm-hmm.
And so, yes. Did you find, and not just that particular training, but I know for myself, I went through, I don't even know how many different trainings and things like that, and the mentor
Read boot camps, and
I did it,
all of it,
all the books, all that stuff. So what was your education journey, I should say, in regards to learning about notes?
So I initially started my real estate journey with another company.
You don't have to call
with another. Yeah. So I got some education from that company, and then through attending different meetup groups and different RIA meetings and all of these different networking opportunities, this is how I came across notes. Mm-hmm. And why I feel that that's important is because when you get the foundational education regarding real estate, you start to understand the different possibilities. But when I came across notes, the niche aspect of that clicked for me, because not everyone, this opportunity isn't necessarily for everyone, but there is an opportunity for it to fit inside of your strategy. Being the bank or having more control over your investments is what spoke most to me, especially because once you do other strategies and they aren't working in every market, I think notes can work in every market, because it's flexible. It might take a little bit longer, but it is a flexible strategy. And I think if the pandemic has taught us anything, it has taught us that we can't have just one way of doing things. We have to be pretty fluid. And I find that notes give that opportunity to be fluid.
Yeah. Speaking of the pandemic and taking longer than it needs to, what has your experience been thus far? We are still in this kind of pandemic environment.
Mm-hmm.
And so what kind of has been your experience, if any, on any of your notes where it has taken probably longer? I mean, notes take a little while, depending on what they are. They take a little while to resolve and go through, because many of them have to, either go through the court system or some kind of foreclosure or,
Right.
eviction or whatever the case may be. And that all of those processes have just been prolonged even more now. So are you experiencing really long delays on getting some of your things exited?
So the notes that I have are actually performing. So I haven't, I mean, yeah. So, I mean, I guess I can't really speak too much to that example, but from what we have been looking at in terms of the inventory that's available, I'm noticing that there are a lot more what we like to term sub-performing notes, which just means that they are making payments, but they may not be making payments every single month. And so I'm noticing that is more of a trend, or more of what we're seeing in the market, just given of everything that's going on. So that can create some opportunities as well, because even if you're not able to take the property back, that gives you the option to maybe modify the loan, or at least start to help people in different ways than we would normally do. But yeah, that is a trend that I'm seeing based on the market. People are still paying, but they might not be paying every month. And then you also have some areas where if the property is vacant and it has been vacant for a while, there are some towns who are starting to expedite foreclosure proceedings because of the amount of inventory that's coming onto the market. So I would say it really hate to say it depends, but it does depend.
It does.
It's that's the beauty and the curse of notes.
Yeah.
There's it's not necessarily black and white, but there is still movement. There is still a lot happening.
I think that's one of the things that I kind of love about notes, is because it kind of reminds me of doing contracts. So a lot of our answers are always, it depends, because it always depends on what the situation is. It's really, well, there are some black and white answers, but it still depends on
if X, Y, and Z happens. Then exactly.
That's what reminds
me. It's a workflow.
About contracts.
If this happens, then this will probably happen.
Right.
And that's
so. And speaking of that, some of the inventory that you're seeing. So now we know we're in a hot real estate market right now. This is the seller's market. Prices are, looks like we might be headed for another bubble and all of this stuff.
Yep.
When you're seeing some of your note inventory, what are you seeing over price notes? Maybe note sellers are asking for too much, or are the prices looking not as deep of a discount as they were previously?
When we think about notes, I mean, there's some standard guidelines in terms of what we should be paying for the debt associated with the property, whether it be a performing or non-performing. I think depending on the seller, so I think some sellers are still being pretty reasonable in terms of their pricing, but when you're looking to pay under some of the standard guidelines, so for example, if it's a non-performing, our standard guidelines are generally 45 to 50% of the unpaid balance. If it's a performing note, we're looking to generally pay 80 to 85%. So when we're looking to be under those standard guidelines, that's where our due diligence and our research comes in, to be able to explain or put forth an argument as to why we would be paying underneath that. And as long as you know what you're looking for or the argument that you're looking to present, I feel like most of the sellers have been pretty reasonable to say, okay, you know, this isn't a true performing note. This particular borrower has missed a few payments. We would entertain a lower offer, but you have to still present that argument. It can't just be, okay, well, I just feel like, you know, paying 60% just because. Like you present the offer, you show that you know what you're doing, and I think they're more adept to listen versus just saying, okay, no, I'll wait.
I know some buyers, they may do it differently. They may not, I guess, determine whether or not they want to buy a note based on the UPB. They may determine that they want to buy a note based on the yield that they get from that note, which may put them over that standard 45 or 50% on the note, which a lot of people would think, you know, well, why would I pay 70%, you know, 70% of UPB on a non-performing note, but maybe it's going to get you a 25% yield, you know.
Or even in that situation, if depending on the particulars of that particular note, let's say you're paying 70% for a non-performing, but the property is vacant and the aftermarket value is significantly higher, then yeah, it might make sense to pay a little bit more so that you can, you know, have a greater chance of securing that asset because you know your cash on cash return or your return on investment is going to be higher.
Right.
So as we've been saying, it depends, you know, on the situation, but
there's more than one way to skin a cat. So
that's right.
The
that's
same
right.
way
Perfect
that
way to put it.
there are multiple ways to exit the note, there are multiple ways that different buyers bid on an asset, you know, whether that be based on whatever yield that they're expecting or whether they want to do it based on the UPB. You know, I don't feel like there's any one right way, you know, it's whatever is going to suit your needs.
Right. And you have to think about, I mean, like you mentioned, in the market that we're in, this is a seller's market where you have people paying double asking price for distressed properties. So when we're talking about, oh, okay, well, I'll pay 70% of an unpaid balance, you're still factoring in your discount. You're still getting it at a discount versus kind of fighting with other investors to pay over asking, because then you're already shrinking your margins at that point. So like what you said, two ways to skin a cat, right? Or multiple ways to skin a cat. With this particular strategy, you're still getting under what most people would be paying for probably the same type of property.
Absolutely. So what I'm going to do is I'm going to put your information back up. If anybody in the audience has any questions, feel free to unmute yourself and ask any questions, or you can type it in the chat box for Lorraine. And I'll give that a couple of seconds. Okay. All right. Looks like nobody has any questions. Like I said,
that means we did a good job. No, just
I appreciate it. So anyway, everybody, Lorraine's information is up here. Reach out to her. She's looking for JV partners potentially if you want to do that. Here's her website up here, melaninhomes.com. Her email. You can text her at her phone number. You can reach out to her on social media. And I want to thank you again for taking your time to come and talk with us.
And thank you again for having me. I really appreciate it.
Absolutely. Everybody have a good night.
Bye. Is it still?